Let's go, legends. Finally, I am live for the first time this week. I took a little bit of a break, went away, could not really pay that much attention to the charts, so haven't been doing any trading, but now I'm back. Okay, to do some proper technical analysis here on the price. We got some upwards momentum, everyone got excited. And now we're falling back to the downside. So what can we expect next after we claimed the high over here? Right, SFP from the high. Basically, you just grabbed a little bit of liquidity there above the high, and now we are falling down again. Okay, so what can we expect? Are we going to continue higher, or is this the end and we are going to claim this low? So let's go through a couple of scenarios, discuss the probability of each scenario, and see, well, what can we expect next. On the smaller time frame, it is interesting, and I will go through the smaller time frames. Let's first tackle the higher time frame, but it is interesting that we have formed a three-wave structure down. It really does count better as a three-wave structure, and when you do see a three-wave structure down, regardless of what happens here, there's always a chance you're going to claim that high once again. Okay, this is not a great start for impulsiveness to the downside, unless we are forming multiple 1-2s. Maybe this is a 1-2, 1-2, already bigger than the first 1-2, not what you want to see, not an invalidation. But now, again, maybe 1-2, 1-2, and now we're getting this choppiness. So not a great start, guys. Not a great start for an impulse to the downside to absolutely just capitulate. Usually after your first 1-2, your second 1-2, you want to see the capitulation already. And now you're building these smaller waves, okay? It really does look more corrective than impulsive to the downside. Okay, so let's get back onto the 4-hour time frame. Let's look at a couple of scenarios. Also from an education perspective, I will also go through a couple of FIB levels that I pulled here to the upside. And right, well, from a swing failure perspective, okay, what a beautiful swing of that high. And now we're getting the downwards momentum. So if you do trade swing failure patterns, I mean, it doesn't get better than that. You grab the liquidity, you trade below, you enter, you know exactly where to put your stop loss. You move it down to break even, and now you just scoop up profits on the way down. Okay, unfortunately, I have not managed to enter any trades in this zone, okay, because I took a little bit of a break. But now I'm back. I'm ready for a trade. And we can go through the smaller time frames in a moment, where I'll discuss, well, what area inside of this zone looks interesting for a possible trade. Okay, so on the larger time frame, let me know, can you guys hear me? Welcome back, Dewald. Happy to see you live. Mariela, great to see you here in the live stream. Welcome, welcome. I haven't seen you in a while. I saw you last week and the week before, I think, on Andy's live stream. You popped into my live stream. You back in the community. Welcome back, Mariela. Great to see you here. Irina. Oh, the ladies are here in the stream. I always appreciate seeing ladies because it's such a male-dominated thing to do, trading. Okay, it's very male dominated, so when I see women trading successfully, it makes my heart happy. Okay, hello Coca-Cola. Welcome, Carlos. Hi Dewald, I hear you. Welcome to the live stream. Yes, we can hear you. Yes, okay, cool. Yes, mic is coming through, pictures coming through. Yes, you all should be able to see me nice and crispy clean. Okay, now let's get back to the technical analysis. Something that I need to talk about, just again from a refresher perspective, okay, is that we have, well, from a simple, let's keep it as simple as possible, okay? Let's throw Elliott wave theory out the window for a second. Well, now this looks like a beautiful break of trend, okay? Let's just place it over there. This looks like a beautiful break of trend, Okay, so from a trading strategy perspective, I know that breakout strategies are not everyone's cup of tea, but I really like breakout strategies on the higher time frames because you can still make some moolah. Okay, you can still make some moolah if you know where to take profits. Okay, because I did speak about, I am thinking about opening up a swing position in the zone. And I'm placing my stop below the low. Well, now we already claimed the highs. That's potentially a profit-taking area already. Okay, maybe you de-risk your position. Okay, maybe you de-risk your position wherever you placed your stop. It's about trade management at the end of the day. But from a breakout perspective, it is nice to see candles closing outside the trend. Okay, maybe we come back for a retest. And then we continue. Beautiful retest. So you need to be very clever where you put your stop loss because you don't want to get stopped out of the trade. Okay. And then it leaves without you to higher levels to maybe come and claim this high. This high really looks like a very, 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 very juicy high to claim. Okay. So from a breakout perspective and from a simplicity perspective, what I like to do is to take a fib from the high to the low, and I at least want the minimum target to be claimed, which is the 0.382. So it is a little bit weird that even if this is part of a larger corrective structure that we did not claim a minimum target. So if price wants to still move down, it's very rare to not claim a minimum target. So from a probability perspective, it would make sense, whether we move up from here or whether we move up from here, to at least claim a minimum target. If price continues to fall down without claiming a minimum target, well, that does not carry high probability, but sometimes low probable scenarios do play out. Okay. Right, so inside of this breakout, usually when I play a breakout strategy, that's usually my TP1. And also when we claim the highs. Okay, so small profit taking area and I TP myself out of the position. Okay, because you never know whether we're going to claim that high, leave some of the position open. You just never know. It's just about how you want to manage your trade to the upside. And do you still spot some opportunities inside of this range? So we'll get to the smaller time frames in a moment. But from a simplicity perspective, we have broken trend. We have high time frame candles outside of the trend. So there is a chance, okay, that we're still going to claim the 0.382 with high probability. It's just a game of probabilities at the moment. It is very strange, especially on higher time frames, 4 hour, 8 hour, 12 hour daily time frames, to have a breakout to it not at least claim a minimum target. So it's just a game of probabilities at the end of the day. Okay, so that was the zone to enter. Okay, you do not FOMO into a pump, guys. You don't FOMO into a pump. Hopefully, maybe we come back for a beautiful retest. You grab all of that liquidity. We know that there's a massive amount of liquidity below those lows. Okay, maybe we grab that liquidity. You start trading back above. Now that is also a very interesting long opportunity. But we might not get there. That's the problem. We might not get here. Okay, but if we do, I have a plan to get in or to add to my position. Okay, because we're going to go through the smaller time frames now and discuss, well, what is happening more locally. But first, I just want to tackle and park the higher time frame. So that is basically the higher time frame. And the scenario for me that makes the most sense at the moment, okay, because it's such a boring range, guys. This has been an absolute nightmare to trade. I would say from here has been an absolute nightmare to trade. Yeah, was some beautiful trading opportunities. I made good cash inside of this zone, but this zone has been a very difficult zone for me specifically to trade. There's been a couple of good trades, but nothing too serious, and that's why I also took a break to say that, you know, I just want to see a clear breakout. I want to see structure that makes sense to me so I can apply my trading strategies. Okay, specifically from a day trading perspective. Okay, I'm not talking about swing trades. I'm going to go through the local scenarios now. So this is the scenario that makes the most sense at the moment. Okay, let me take this fib out and show everyone what I mean by this scenario. Just need to adjust that little box. Okay, so now let's zoom into 2-hour time frame. Let's go and look for the 2-hour time frame over here and zoom into this little structure. What an absolute mess. Do you guys remember when we made this low? Do you guys remember? And we started getting, okay, when we built this structure over here, I told everyone in the live stream, this, okay, is going to be a mess because of how simple that was. I knew that this was going to be an absolute nightmare to trade, or it's going to be extremely complex. It's going to be a difficult corrective structure because this was such a beautiful A, B, C, and you just fall. Beautiful shorting opportunity, beautiful. I think we actually caught the long. I did not catch the short, but I caught the long here to the upside. When you have a simple ABC flat, okay, a flat corrective structure, and you continue momentum to the downside, I know that the next correction that you get is going to be difficult. It's going to be difficult, and it has proven to be very messy, this little structure. So let me zoom in over here. This is basically now the scenario, okay? We have formed a W in a three-wave structure. We have formed an A, B, C, which gives you a W, okay? You can place your X here, or you can even move your X to this little pivot. It doesn't really make a difference because the end result is exactly the same. You have a W, X, and we are now busy with the Y wave to the upside. Y waves can be very complex structures like the X wave. Very complex. The simplest Y wave, like we had over here, W, look at how beautiful this W is. Beautiful three-wave structure. So the simplest Y wave, after you've completed the X, is an A, which is probably finished now. Yeah, at the moment, after sweeping the highs, we are now busy with a complex B wave, and we go up for a C. ABC to complete your Y. Can you guys see? Three-wave structure, three-wave structure. Most common target for your Y wave is the 1-to-1 extension and this little box that I have highlighted over here. Most common. I actually labeled it most common. That is typically where you get a rejection for a Y wave. Okay, but these extension levels that I have over here are also targets. The 786 is regarded not as a high probable target, but I have seen it from a backtesting perspective where it does reject at the 786, but the minimum target has not yet been claimed. It hasn't been claimed yet. So, because the minimum target has not been claimed, I do expect this high to be tapped again. Okay, regardless of how deep this B wave goes. And then we go up for C. Okay, but once the B wave is complete and it starts turning around, maybe it forms a nice little trend, you play the breakout for this nice little leg here to the upside. C waves are beautiful to trade, by the way. They're very aggressive. Okay. The minimum target, definitely I will pay attention, because if this happens over here, okay, it literally pierces through, grabs all of this liquidity, and it starts trading below, that is a shorting opportunity, because that is the minimum target for a Y wave. Most common in this zone over here. I do really like this high. I really like this high to go and grab all of that liquidity and then potentially fall to the downside. So this is the scenario that looks the best. Okay, out of this entire mess that is formed over here, this scenario looks the best. The thing that can get a little bit confusing about the scenario is that the B wave can grab the lows. It's allowed to. It's allowed to grab the lows. Okay, and that's what you call a flat. So you basically create a flat in a Y wave. A, B flat, C flat. You basically eat up the lows, you grab all of that liquidity, and you eat up the highs. Okay, very common corrective structure. But it doesn't have to. It can just be a B wave that ends over here. Maybe it's finishing up the B wave, okay? And then it goes up for C, yet to the upside. Because locally, I'll see now. I see prices taking a little bit of a dumpy here to the downside. But we're going to go and analyze what's cooking here locally. That can we see a higher low being created to move up to complete the C wave. Because remember, in the bullish case scenario, I'm talking about a corrective structure over here, a WXY. After your WXY, you expect the low to be claimed again. So you want to fall down. 1, 2, 3, 4, 5. Correction, continuation to the downside to come and eat up the low. Okay, but the structure can turn out to be bullish. This could be a 1, a 2, a 3, a 4, and a 5. Once I see that, the bulls have a chance. Okay, the bulls have a chance for higher levels where this low could be protected, and this is indeed a diagonal. 1, 2, 3, 4, 5. It's not pretty. I have gone through what is wrong with this leading diagonal. Firstly, they are not common. Leading diagonals are not common. Okay. And this correction is an absolute mess. Also, the way that we've moved up here is just an absolute mess. But we need to give the bulls the benefit of the doubt. Because if this is your 1, this is your 2, and now we're going up for a third wave, well, inside of your third wave, you want to see 1, 2, 3, 4, 5. Okay? In the bearish scenario, you just want to see one more leg up. That's it. Just one more leg. You don't want to see that. Okay? This should not happen. Because if that happens, that opens up the door to more bullish momentum to the upside. Okay, so the structure is going to have to show us the way. And I think it's going to be the reason... Okay, yeah, let me rephrase. The reason I think we're not going to get a flat. The reason I think we're not going to get a flat is because I think the market makers will purposefully want to fool everyone. Because when you create a flat, it makes it very obvious that you can expect one more leg to the upside. Because you can't have a 1 and a 2 that takes the lows. Okay, then it's an obvious A, B, C, done. Okay, it rejects, yeah, it rejects inside of the zone, we fall down. So I think the market makers will make it too obvious if they create a flat. Okay, if they do not create a flat, then it's going to create a little bit more confusion, because now this can be a 1, a 2, a 3, and then everyone's going to wait for that fourth wave to finish. They're going to wait for this thing to break, and it doesn't break, and it falls down. So from a psychology perspective, it actually makes sense for this B not to take the lows. Let's see. Okay, I'm more curious to see how this is going to play out. Okay, I want to figure these market makers out, because if I was a market maker trading with billions and billions of dollars, I would not do that, because it's a giveaway. Okay, I would create some confusion. Or maybe a triangle. Okay, but they are rare. Triangles are rare. To form a triangle in the Y wave, where you basically go A, B, C, D, E, you fall down. Okay, but that will also be a clue, because as soon as you do fall, so basically if you keep on trading sideways, you know, and you form a triangle, you know that the probabilities are higher to break down than to move up. So that's also a little bit of a giveaway. Anyways, that's just my 2 cents over there, guys. I'm just speculating over here. Remember, I'm not a financial advisor. I'm just a crazy dude here on YouTube giving you my technical opinion. Okay, I encourage you to do your own research. Right, so this is a very interesting scenario. And it's the one that I favor the most at the moment. It's the one that makes the most sense. Okay. do I have the impulse? I mean, from a bullish case perspective, okay, this is what you want to see. You want to see continuation. So just to put this back into perspective, you've basically formed a wave 1. Okay, 1, 2, 3, 4, 5, wave 1. You finished your correction, whether this is 2 or whether your 2 is over there. But now you want to see impulse to the upside. You want to see a 1, 2, 3, 4, 5 to complete your third wave. Basically exactly what I said now. You want to see a fourth wave and you want to see another wave up. Once you have a 5-wave structure here to the upside, you claim these highs properly. Not just tap it and fall to the downside. Because I can tell you now, this is a very interesting shorting opportunity. Okay, because this could also be an A, a B, and now we're forming a C wave here to the upside. Okay, this is a very interesting shorting opportunity. If I successfully enter a short over here and I get stopped out, I don't mind. I really don't mind getting stopped out of this trade, because if you have a 1, 2, 3, 4, 5 here to the upside, this is where your opportunity lies. That is your opportunity there. Okay. I don't mind shorting here, because if you short here, it could be your W, X, Y, boom, you fall to the downside. That's why I want to short there. But if it does this, stops me out, okay, hopefully I take some profits. Not hopefully, I will most probably take some profits here to the downside, protect my position, get stopped out with some profits in the back, and then I'm going to know, ooh, this becomes very interesting. That's your opportunity. But I have to see a 5-wave structure. 1, 2, 3, 4, 5. I want to see a 5-wave move to the upside, because this is a 3-wave, which means you're going to claim the low. This is why I want to short here. If it does that, okay, opportunity for long without taking the low. I know, guys, my Picasso drawings here are getting an absolute mess here at the moment, but I'm just steering you through my thinking process, and by all means, this is still going to take very long to play out. Okay. The impulse, unfortunately, does not carry the highest probability, but the structure will show me the way. Okay, so guys, I don't need a high probable scenario to know exactly how to trade it. Okay, if it wants to 3-wave up here and fall down, let it fall down. Okay, I will most probably, hopefully, catch that short if I'm not sleeping. If it creates a 5-wave structure, then I change my mind and I say, guys, probabilities have shifted. We now have a damn 5-wave move here to the upside. This correction is going to be very interesting for long. Okay, and this structure can absolutely rock and roll, guys. I mean, it can rock and roll here to the upside. Okay, but okay, if you don't want to miss all of this to the upside, your opportunity lies here, but I need to see a 5-wave in a wave 1. That's it. It's as simple as that. I need to see 1, 2, 3, 4, 5. Wave 1. Wave 2 becomes the opportunity to play the 3rd wave to the upside. Okay, but that is a very interesting shorting opportunity, and it might not even get there, but if I was a market maker, I would send it. Okay, I would create some bullishness. I would get retail back. If you want to fake them out. Okay. Destroy the like button, legends. Mr. Crypto by Matthew is here in the house. Guys, if you haven't checked out Mr. Matt, yeah, okay, comment on the screen. Go click on his photo. His YouTube page will pop up. Absolute legend. I mean, Matt, absolute legend, okay? One of the best fundamental analysts that I have seen. He really makes sense of news in a way that, guys, you know, you need to play to your strength. My strength is technical analysis. Matt's strength is taking news and data and making sense of it, okay? And also then plotting his trading decisions based on all of that. But thanks for joining, Matt. CVM, welcome. Yes, he's in the house. B-wave interesting target zone is GB. Oh, yeah, 90k in alignment with high volume node and daily naked pointer, so definitely worth a try. Thomas, yes. So now let's go through some. Okay, last thing, guys, here on the higher time frame. I know a lot of people are also talking about what if this is a, this is a B, and now that was your C wave. Done. Okay, it's done. Could also be a WXY. It's just strange that the WXY did not claim the minimum target. But this could be a completed ABC. Three-wave structure is done. Okay, remember the probabilities that I highlighted? It is very strange, okay, not an invalidation, but it will be very strange for a corrective structure to not at least tap a minimum FIP requirement. Okay, basically just claim the highs. But also when I take, let's go and check this out. I just want to make sure that the music is nice and softly in the background and not distracting. If I measure this from the low, okay, to the high, to where the B wave ended. Okay, let me take this out the way. We don't need that. And I reverse it. And let me switch on all the levels. Sorry guys, I only have my flat targets there, but I have a template here that I toggle on and off. Okay, so in this scenario, because I know some people are talking about this, and A, B, and now we've gone up here for the C wave. In this scenario, we also have not hit a minimum C wave target, which by the way is extremely rare to hit this target over here. The most common C wave target is the 1-to-1 extension, 1.382, 1.618. Okay, unless this C wave is still going to fly here to the upside. But now you can see, okay, if this scenario had to play out where this forms the 1, the 2, the 3, the 4, and the 5 inside of the C wave, grabs all of this liquidity, okay, above this high, grabs all of the liquidity, you have a 3-wave structure. This is where I want, if price gets here, guys, definitely a shorting opportunity. Remember what I said, even in the bullish case scenario, okay, I want to see that. I want to see that. And if that's why this is such an interesting shorting opportunity. Okay, this is such a interesting shorting opportunity, because you might not get this. And then all hell breaks loose and we claim the low. Okay, so you can see that even a WXY and an ABC, same result. WXY, ABC. I still expect higher, okay, higher levels, because even on an ABC, we have not tapped a minimum Fibonacci retracement. A minimum target has not been claimed. So if price capitulates here to the downside, I'm going to sit back and tell everyone, well, I'm sorry, technically it was supposed to at least tap a minimum target. It is not often that I see a corrective structure, especially on the larger time frames, not at least tap a minimum target. If this C wave pushed a little bit higher, just a little bit higher, and it claimed that minimum target, I would have said, okay, there's a chance. There's a high chance we're going to claim this low. But it's just not a minimum target. That's very strange, guys. It's very strange. Okay, so that is the last scenario, because yes, okay, you could count it like that, but I cannot give the scenario the highest probability, okay, because a minimum target has not been claimed. I just cannot give it the highest probability. Technically, I can't. And guys, remember, I trade probabilities. And if I'm wrong, I simply look for a next trading setup. Okay. Now, the most interesting part. Okay. Can you check small time frame, please, Dewald? Yes, this is now where I'm going to. Okay, let's now go on to the 15-minute time frame and go and look at this little structure over here. I think this is now the most interesting structure. It is important to always start with the larger time frames to gain some directional bias. Okay, so my directional bias, even with a fall here to the downside, are leaning slightly higher to still move up. Regardless of how deep it goes, it's to still go and claim the highs, or this high again. Okay, now what I like to do is, now that I have directional bias on the smaller, on the larger time frame, now I go into the smaller time frames to see, well, does it correspond with my directional bias? Okay, now let's go on to the 15-minute time frame. Okay. So I'm not going to go into too much detail to count this here to the upside, guys. But if this is indeed an impulse from this point to this point, if this is an impulse, okay, I like to take time from the low to the high. And you can see, okay, and this is what I told the Legends Pro community this morning as well. If this is the low and this is the high of this impulse, this nice little momentum that we've had to the upside, and it is indeed a 5-wave impulse to the upside. I'm not going to go and count the smaller time frames. You want your correction to end at least after the 0.382. So when we made this low, I told everyone it's not time yet. Okay. And I'm going to go through the smaller time frames in terms of what I analyzed this morning and what is now playing out for the Legends Pro community. So now it's becoming interesting because as price is falling down here at the moment, it's now after my minimum requirement. So now it is interesting to start looking for long opportunities. Okay. So in this little, let me take this out the way. We don't need this anymore. We now know that price has now retraced from a minimum perspective looking at time. Okay. So what is interesting about, okay, and this is something that I always look for, guys. Once we made the high, what is this? Is this more corrective? So is it correcting the impulse and we're going to go up again? Or is it building impulsive structures to the downside? Well, here on the 15-minute, this looks like a beautiful 3-wave structure. Okay, it really just counts better as a 3-wave structure. Okay. There's a bearish case scenario. It's double 1-2, but price needs to, it just needs to fall at the moment. The more it chops here at the moment, the higher the probability that this is a corrective structure. Okay. So when you form a 3-wave structure, that gives you A. Okay. Maybe the B is not finished and we're still going to do this. So, which brings me to these scenarios. I actually have them drawn out over here. So, one interesting scenario could be an ABC flat. And we are now busy still with the B wave here to the downside. Because remember, once you have A, okay, your B wave has to be a 3-wave structure. So, okay. So I want to see a 1, 2, 3 to complete B. And then you can go down again for C. That is the longing opportunity. And then you go up. So this range could still drag on. And it can still get very boring. Because locally what I'm spotting over here is if this is A, and now we're forming a 3-wave structure in B, you can most probably say, well, what if this is A, B, C to complete your 3-wave structure inside of your B? And then everyone thinks we're going to continue, and then we don't. We claim the lows again. And you basically formed an A, B, C flat, and then we continue to the upside. Okay. So here on the 15-minute time frame, if this scenario is going to play out, and this is, you know, guys, longing opportunity, shorting opportunity, that's your flat targets. If this locally now, if this is your A and this is your B, that's forming here, and we're going to go up for C inside of your B wave. Let me just make that minor. Guys, I know it gets very complex. I know it gets very complex, but I'm just trying to explain it as best as I possibly can. Okay. Firstly, the range can still continue. Okay. The range can still continue because of this 3-wave structure down, which I've now labeled an A. There's a WXY as well, but it looks like it wants to form a ABC flat over here. We'll see. Because I have an invalidation for this scenario. I do have an invalidation. For this B, for price to basically still go up to form this little B here to the upside. Okay. This B should not tap the 1.618. When I take a fib from the low of this A to the high of this A, I drag it across. reverse it to the downside. Okay, this is my invalidation. So if price is still going to form an A, B, C, and inside of your B wave you have an A, B, C, that's your invalidation. Okay. Most common target for this little B wavy over here in this A, B, C, the most common target is this little boxy over here. $90,000 613 to $90,000 285. This is the most common target for a B wave. Okay, but once you go up, you might not continue up. You can still come down to complete the C wave. But it still presents beautiful trading opportunities. Okay, and those are basically your flat targets. If I put my template on here, flat, there we go. There's your flat targets, okay? So as long as price taps any of these levels, okay, there's a chance to still come and eat up this high. Okay, and because remember guys, and this is the reason this is such an interesting shorting opportunity for this B wave. Okay, if this is an A in a 3-wave structure, B has to tap a flat target. Has to. Otherwise, it's not an ABC flat. So that is your minimum target that it needs to claim, which is the 0.9. I know there's a lot of education here, guys, as well. So you basically say, whoops, what did I do? I clicked on the wrong button. Yeah, took you all away. Rangy. Yes, Mariela, it's just an absolute nightmare to trade. Okay. But if this is the high of your A wave, okay, because this is where it started, A, B, C gives you A, and I drag it across, you can see that that little box, okay, that I have over there is exactly inside the flat target zone. And then there on top is my invalidation. So it's exactly the same way that I've just explained it. If this is an A and a B, it's not allowed to claim the 1.618. But not allowed is a very strong word. It significantly reduces the probabilities that this is a B wave if it taps the 1.618. It's not an invalidation, but it's very, very rare to see a B wave tap the 1.618. Okay, and that's why I usually make it my invalidation. So it's exactly the same thing. 1.618, B should not go there. 1.618, B should not go there. Unfortunately, B waves are notoriously difficult to trade. Some Elliott wave counters, when they identify a B wave, they stay out of the market. So I can tell you now, some Elliott wave traders will not trade this. They don't care what happens here. They will not trade it. Okay. But yes, guys, this is one scenario that could play out. Okay. Longing opportunity, shorting opportunity, and I'm just speculating that from this little pivot, if this is the impulse, okay, you could still form a larger 3-wave structure. And then we continue momentum to the upside. For now, this looks like a 3-wave structure to the downside. And what I also told the Legends Pro community this morning, because this looks so 3-wavy, regardless of what happens here with this correction, the probabilities for now are higher that we're going to take out that high again. Okay. We all know that corrective structures can become very complex, guys. We all know, okay? This little correction can also turn into something absolutely disastrous, like this, okay? Like this can form over here. So I can only do technical analysis based on the current price action that I have in front of me. Okay, because let me just take some of these levels out the way. The scary thing, guys, and I don't want to go there yet. I think, I want to wait for price to play out. But once you form an ABC, that could also give you another A, or it can give you a W. You do a B, or an X. Okay, you go down for Y. Can you guys see what can happen? Okay, so it's just important to have your levels ready, guys. It's just important. It's so important to have your levels ready. Do you have your naked point of controls? Do you have your daily levels? Where's my daily levels? Here we go. Do you have your weekly levels? Okay, the base level that I now have here to the downside is a little bit further down. Okay, that's the only level that I have here to the downside. But I can trade Fibonacci levels as well, and I have done so very successfully. Okay, so I just want to make sure. Yeah, at least this 1.618, I just wanted to see. This 1.618 at least is below this level. So if things get really nasty, I mean, I would love to see a beautiful SFP from this little pivot. We had a point of control. Do you guys see? Well, I still have it here. Do you see that point of control? Look at that. Man, that was a stunning trading opportunity. You grab it, you leave. Beautiful trade. Okay, whoever played the swing failure pattern. I didn't trade the last couple of days. I was busy doing nothing. Okay, just relaxing. Right, so very, very interesting. Let's see if the scenario plays out. But now, you know, we can go a little bit complex. Just want to see if that WXY that I highlighted this morning is... This is another scenario that I was looking at this morning, but... A, B... Just want to see something here. Let's just take that out. You go up for C. Yeah, I mean, guys, like I said, you know, this can still morph into, it's basically what I've just drawn out. It can still extend into a larger corrective structure, okay, where you basically have formed a three-wave structure in a W, okay, you form a three-wave structure in an X, you can build a triangle, you can create a flat. There's so many things that can happen here, but locally, because this looks like a three-wave structure, okay, if you can count five-wave structures in there, be my guest. The most bearish case scenario that I have, okay, because I know I'm hammering on this three-wave structure over here, but because of this three-wave move to the downside, okay, regardless of what happens here, there's still a high chance you're going to claim that high. But let's now talk bearish. Let's say we're not going to claim this high. Okay, it's over. The bulls have lost this game. Okay. Let's take this out the way. Let's clean up the chart. What I like to see from the highs, okay, for the bulls to have a chance from the highs, okay, I cannot count a 1, 2, 3, 4, 5 is missing. This is missing, so there's no impulse to the downside. Okay. The only scenario that still works is, what if this is a 1 and this is a 2? Fine. Okay. This is another 1 and this is a 2. Okay, fine. Slight problem already that this 1 and 2 is bigger than this 1 and 2. Okay. And then maybe this is another 1, 2, 1, 2, 1, 2. How many 1-2s do you want to build? 1, 2, 1, 2, 1. It's just, it doesn't look pretty as a nested 1-2 scenario. It really doesn't look pretty. The best 1-2, guys, I mean, this is beautiful 1-2s. Let me show you examples of multiple 1-2s. Okay, we haven't had them in a long time, but when we had these impulses here to the upside. Let me go look for a recent example. Okay, yeah, I mean, this was a nice one. 1-2, 1-2. Okay, that was a nice one, but the most beautiful one that I saw was this one over here. Okay, look at this. This is what you want to see in nested 1-2s. It looks like a leading diagonal. Okay, 1-2, 1-2, 1-2. Can you see that they're becoming smaller? They're contracting. Okay, it's beautiful. And then you get the 3, 4, 5, 4, 5 to the upside. You basically repeat the structure to the upside so that you know, then you know the top, you know, this is where you start paying attention for shorting opportunities because the big move already took place. Now, if I compare it to what's happening here locally, it's not pretty, okay, as nested 1-2s. It's not invalidated, but it's not pretty. Do you guys see? It's not pretty. Okay. Then we have to talk about diagonals. Okay, that's the last option that we have. 1, 1, 2. So maybe that's the diagonal. Diagonals always carry the lowest probability. Okay, where you formed a 3-wave structure in a 1. Okay, that's your 2. With 3, 4, 5. And then you still go up for a correction. Okay, so you can see that there's still a lot that needs to play out. I want that 1.618 here at the bottom somewhere. It needs to be claimed. It needs to invalidate that B flat that I've spoken about. I want to see, because this is a 3-wave structure, all the waves has to be 3-wave structures. Okay, 3-wave up, 3-wave down, you form your 5th wave, you go up for correction, this becomes 2, this becomes 1, and you absolutely tank here to the downside. But the structure will reveal itself. Once I see this will become a very interesting shorting opportunity. But because of this, for now, based on the current price action that I have, the probabilities are still higher to take that high. So I need more price action in order to change probabilities. There's not enough price action at the moment. Okay, worst thing that could happen over here is that for some odd reason, this is multi 1-2s building up here, multiple 1-2s. It needs to capitulate. It needs to fall aggressively. Okay, once it falls aggressively and it does this, it starts slowing down. You have your high volume in the middle because now it needs to repeat this. Yeah, that is where I will be looking for longing opportunities. So I will use the structure to make trading decisions. For now, based on the current price action, the probabilities are still higher to take out this high. Unless something changes over the next day or so. Okay. I hope this makes sense. Guys, remember, if you'd like to come and trade, if you're not using these exchanges, these are the exchanges that I use personally. I use Valto for scalping, Bluffin, okay, where I have currently my largest portfolio in at the moment from a day trading perspective. Weeks, still 25% discount on your trading fees. BTCC, where you can trade commodities, but there's something massive coming for BTCC. I'll most probably talk about it tomorrow. Okay, and if you want to join our Legends Pro community, link down in the description. Also, guys, I have a playbook, a trader playbook. I have a trading course. Everything here down in the description. If you want to learn how to trade properly, here's the course. If you don't want to deep dive into the course, I have a 70-page PDF playbook that I wrote as well. Okay, so I've been busy I was very busy last year. Okay, also, let's do some Fibonacci over here. I have not done that just as yet. You can see we've just tapped the 0.5 here at the moment. Okay, getting a little bit of reaction. I want to see what CVD is doing. We have a mix between bullish and bearish CVD. Okay, sometimes CVD just does not play ball. Okay, we have the Bybit bros absolutely tanking here to the downside, shorting like crazy people. And then we have the rest of exchanges creating bearish CVD over here. So a little bit of a mix. We don't have clear direction at the moment. Okay. I know some people, it's not their cup of tea to play these breakouts. Okay, it's not their cup of tea. I do like the breakout strategy on larger time frames. 15-minute, 1 hour preferably. Okay, but I think we could get some upwards momentum if we break this trend successfully. Okay, we can even change it to this little pivot. There we go. I think if we break this trend successfully, there's a good chance to come and eat up at least these highs over here. Okay. Just eat up these highs because you could still form that A, B, C. Remember, you don't have to claim that high. But I think there's a good chance to eat up these highs if we break here successfully. Okay, so you could say, well, I'm going to play it safe. I'm just going to wait for the trend to break. I'm not going to do anything over here until my alarm goes off or it breaks the trend. CVD, oh, toxic love, giving us mixed signals. There's been a couple of times, Mariella, I'm not sure if you remember, there's been a couple of times where I sometimes I look at CVD and I'm like, okay, I'm not using it today. It just gives mixed signals and I only trade the price action. Okay. So, I mean, if price can continue, you've got that 0.5 Fibonacci over here. Okay. If price can continue to trade above this level, that could be a bullish sign. You've already grabbed the liquidity below this low. That is a good sign. If we can start trading above, break trend, show some strength, okay? And then again, you take a fib from the high to the low and you TP yourself out of your position. That could be a nice little trading opportunity. Okay, remember, if this is going to be 1, 2, 1, 2, 1, 2, 1, 2, you don't want price to go up. As soon as price starts going up over here, there's a better chance you're going to claim that high than creating more you're going to start invalidating the nested 1-2s. So in the bearish case scenario, price needs to fall. It should not break the trend. It needs to fall. Which, by the way, doesn't carry a high probability. Okay, and that is basically the update here from my side. Dewald, please, can you explain to me how to identify bullish and bearish CVD? Blazing Fury, I've unfortunately run out of time. I will tackle that maybe during the next live stream. I love these. What I can do is I can basically explain the basics. Okay, I can explain the basics over here. So let's go on to 15-minute time frame over here. I'm not going to go into all the details, but I'll explain the basics. So how CVD basically works. And what I'm going to do is I'm just going to switch on one line for simplicity's sake. Let's leave the yellow line. Okay, so you understand the concept. Okay, in a nutshell, the basic concept of CVD, okay, let me take my little drawing tool over here, is, let me see if I can find a nice little example. Okay, there's an example. Okay, a beautiful example actually over there. Okay, when you make a low, price goes up, it comes down, it makes a higher low. You have CVD making lower lows. Okay, higher low, lower lows. That is bullish. The target is the high of the structure. So you have a higher low, you have a lower low on CVD. The target is the high. So you enter, you put your stop below the low, your TP goes above the highs or at the highs. Okay. Now, during those momentum here to the upside, we don't have anything on this line just as yet. So against this pivot, what you would like to see as this correction progresses, okay, you would like to see CVD form bullish CVD. You want to see a lower low. And you want to see a higher low. Complete opposite. They just need to do the opposite. Okay, that's bullish. Bearish, let's see if we can find some bearish CVD over here. I think I do spot some bearish CVD. Yes, okay, so here was bearish CVD. Just to explain to you what's the difference. So between this pivot and this pivot, you made a lower high. But on CVD, you made a higher high. Which means you're going to take the low of the structure. And it did. Took the low of the structure. And that, in a nutshell, is how CVD works. Okay. I know it gets a little bit more complex. But, it's going to take me a long time to explain all the details of exactly how to use CVD properly. Always awesome TA. Thanks, Dewald. Dewald, the disclaimer didn't show up today. I know, and this is why I said it. Okay, and I'll say it again. I am not a financial advisor. I encourage you to do your own research. I'm just a crazy person on YouTube giving you my personal opinion. Okay, thank you so much, Legend. Absolute pleasure. Have yourselves an amazing trading day. I will see you all tomorrow again. And until the next one, cheers for now.